Hello, dear traders. My name is Clara, and these are the main trading ideas for the current session. First, let's look at the situation of the US dollar against the Swiss franc. The US dollar against the Swiss franc continues its upward momentum, marking gains for a seventh consecutive session. However, further appreciation may be limited, as the Swiss franc is likely to find support from expectations that the Swiss National Bank will keep policy rates unchanged in December amid persistent inflationary pressures. The franc could also benefit from a new trade agreement between Switzerland and the United States, which lowers American tariffs. This agreement is expected to support the Swiss economy's recovery following the slowdown caused by previous tariff measures in the third quarter. Meanwhile, the US dollar is under pressure as expectations for a Federal Reserve rate cut in December have increased. Market indicators now suggest a high probability of a rate reduction at the upcoming meeting, a sharp rise from previous estimates. Statements from Federal Reserve officials have reinforced these expectations. John Williams, president of the New York Fed, noted that policymakers could still consider a rate cut in the near term. Fed Governor Stephen Meyer added that recent employment data support a December reduction and that he would vote in favor if his vote were decisive. In contrast, Boston Fed President Susan Collins stated that she has not yet reached a decision regarding potential changes to policy rates. Next, let's move on to the US dollar against the New Zealand dollar. The pair is retreating, showing losses during early Asian trading on Monday. The New Zealand dollar is under pressure against the US dollar as market participants anticipate a rate cut from the Reserve Bank of New Zealand at its upcoming policy meeting on Wednesday. In October, the Reserve Bank of New Zealand surprised markets by implementing a larger-than-expected cut, reducing the official cash rate by 50 basis points to 2.50%. Analysts now expect a further reduction of 25 basis points at the November meeting, which would bring the down to 2.25%. Earlier this month, the Reserve Bank of New Zealand released its November 2025 Financial Stability Report, highlighting that financial stability risks remain elevated due to ongoing global uncertainties and weaknesses in certain sectors of the economy. Traders will be closely watching the central bank's post-decision statement. Any less dovish language or hints that the current easing cycle may be nearing its end could help the New Zealand dollar limit short-term losses. So these are the main trading ideas for now. Thank you for your attention, and don't forget to subscribe to our YouTube channel.